Well, we're back with you to take a look at our grain and livestock market activity. I'm Marlin Bohling, your tour guide to your ag commodities, and we have a little extra in-house help right now. It's Monday. That means we have Chris Swift in the studio. He joins us right now. He's with Swift Trading Incorporated, and he's based in Nashville. Hey, how are you?
Doing great. A little wet, but other than that, all right.
Yeah. I wanted to ask you about this weather situation here. We've got a lot of weather factors impacting the ag commodity markets from one end of the country to the other.
Yes.
So break this down. What's going on? Nobody's getting much harvesting done.
They're really not, and especially up north. We got a little bit of snow came in for the first time this year. A little snow in there, and that's hampering some of the harvest pressure. As we were talking earlier, we've seen beans sprouting in the pods now. So I don't think that I've ever seen that, but I have seen some pictures of it that some clients sent to me. So I think it's real from what I've seen. And other than that, I think we need some dry weather now.
I've heard of corn sprouting in the ear, and you know, if you have the ears that don't drop, you know, they can get water standing in the husk, and I've seen that. I've heard of popcorn sprouting on the ear, and now I've heard of soybeans sprouting in the pod. I've never seen anything like this. It's just being inundated out there through a broad part of the country. Kansas-Nebraska border, they had a half a foot of snow yesterday.
Wow.
And that can't be good for standability on the corn that remains out there.
It'll weaken all the roots and everything. Those corn plants tend to get a little top heavy there.
Yeah. So the soybean market is firming up a little bit. Let's go ahead and run through these prices here, and I'll get your take on that. So here we go with the corn. First of all, it opened up basically unchanged, and now we have it trading a half cent higher at $3.74 1/4 per bushel, and we have March up a half at $3.86 1/4. Now the soybean trade had been pretty flat overnight. It didn't do too much, and now we're pushing the upward end of the envelope here on the trading range today. Check it out. November soybeans up 8 at 875 and a half, only one tick from our high of the day. And now you have the January contract up 7 3/4 at 889 and a half, only one tick from its high of the day. So it's starting to run here a little bit. Now looking at the wheat market here this morning, we have Chicago December wheat just up a half cent at 517 3/4. And July earlier had been a little bit higher. Now it's down a penny at 554 and a half. That's intriguing. Let's take a look at Kansas City wheat here. The nearby December contract has now gone lower again. We're down a penny and a quarter at 523. We had been as high as 526 and a half. So it's been on both sides of unchanged here. And new crop July is down 1 3/4 at 565 and a half. Only a couple ticks from its low of the day now. In Minneapolis wheat, we have the December contract now trading 4 lower and 592 on the low of the day. July is unchanged. Let's talk about this market the way it is right now. What do you think this means here with this kind of market action and the fact that farmers just can't get much done? They can't turn a wheel today.
Well, they can't, but what they are able to do is get some marketing done. So the rain doesn't hamper them getting corn out of the bins or beans out of the bins and cleaning those out, getting ready for this year's harvest. So I think that's maybe some reason why you're not seeing as much price action firmer due to this, is because we are still selling quite a bit of last year's crop. And any price increase we get right now is going to be favorable towards doing that.
And of course, now we are past the USDA crop production report and the supply and demand report. So now I guess the weather is going to be the dominant factor.
I think so. I didn't see the USDA make much changes on Thursday when they released their report. They were all by fractions and just a little bit of a reduction in the yield. But other than that, I didn't see much of a change in it.
All right. So we'll take a look at the other side of the coin. We'll take a look at livestock in a moment. And we are talking with Chris Swift. He's with Swift Trading Incorporated, and we'll be back in just a moment. Thanks for joining us. I'm Marlin Bohling with you, along with our very special guest. We have Chris Swift in the studio with us right now. He's with Swift Trading Incorporated in Nashville. And time to take a look at our livestock trade. And Chris, when we opened up, we had a little bit of a firmer tone in the cattle market. We had a very firm tone, very strong tone in the hog market to start out today. So let's look at our latest prices here, and then we'll talk about it a little bit. Okay, here we go. On the live cattle board right now, let's see where we are now currently trading. A little bit firmer here on the live cattle board. We have the December contract showing a trade here that was 30 cents higher at 116.47. February up 32. Now, if you look at the feeder cattle trade, we've been higher and we have been lower. It's been chopping around here this morning. November showing the last trade about 10 lower at 154.62. January down 12. And then you look at the lean hog trade, and if you ignore the nearby October contract and you look at the December and the other months further out, they're over $2 higher. So we have December over $2 higher, about 242 higher today, roughly. Talk about this hog trade here. How strong is that when you look at a technical chart pattern here on the hogs?
Well, I'm not real sure how strong it is as much as there is a basis differential. The lean hog index is still trading up about 67, 68. The December futures were at 55, 56, I think, somewhere around in there. So you've still got 8 weeks now to converge a $10, $11 wide basis. So I think that's why you're seeing hogs kind of firm up a little bit on the futures. We know that fourth quarter pork production is going to be record again, but now we've seen some variances where we went all the way down into the 45 area for December hogs. They said that was too cheap. Now we're still trading 65, 66 for the cash hog index, and so I think the future's stuck right here in the middle. They're probably going to do some more inching up towards that index.
Now October actually went off the board Friday, right?
Went off the board Friday, yes.
Okay, so now the December has moved up a notch and
that
has
is
taken
correct.
over the lead month here.
Yes.
But there was what was there, like a $12, $15 disparity between the two, right?
There was. Yeah, well, not in between October and the index. The October and the index ended up less than
the
$1.
October and December.
Yeah, but October there is a wide, and I think that's due to the fourth quarter production, large fourth quarter production.
So is that going to have any spillover impact on the cattle side here, on the beef
probably
side?
not. We've noted that with the new economy and being so improved that the retail spread between hog, pork and beef prices hasn't impacted the consumer at all. They are still choosing beef over pork as long as we have this discretionary income coming in like this.
And cash cattle trade,
111 last week, kind of the same. It's been pretty dull and boring.
Been that way for like about
4 or 5 weeks now.
Almost a whole month straight.
It sure is. Very rare in the cattle market.
I guess it's nothing if not consistent.
Yes.
Cattle trade. All right. Well, thank you, Chris, for coming in. Good to visit with you once again. Chris Swift of Swift Trading Incorporated. And, of course, he's based right here in Nashville.